Hello traders everywhere, Adam Hewison here, coming to you from the digital studios of MarketClub, and we'll be analyzing gold. That's right, spot gold in fact. Gold is traded 6 days a week, 24 hours a day, and it's one of the biggest markets in the world. And it's one that evokes fear, greed, love, obsession, whatever you want to call it, but it's something that I think you should look at in a very technical, non-emotional way. I think that's the best way to make money in gold, and I'll show you how we have done so far this year trading gold later on in this video. But first of all, we're going back to 2005, and as you can see, we've had some pretty nice moves up and some moves, of course, down recently. But what I'm looking at is the big picture, and I want to show you our Fibonacci tool, which we use here. Just click here, and it puts a little yellow box here telling you the tool is live. This is on MarketClub, and I want to measure from the highs right here all the way down to what I consider to be the most important low in the last several years. And this occurred in 2008, and this is November of 2008. So what Fibonacci does, it measures retracements, pullbacks from important highs. And I think these 2 points I say are important highs, significant highs. So you can see we pull back to the 38.2%, we pull back to the 50%, which is an important element, and we have yet to pull back to the 61.8%, which is total retracement. Now, we may or may not see that, but there's another tool and another chart formation that I think is setting itself up to indicate gold prices are headed lower, and they still have a lower technical count. Let me show you what that is. Okay, we've zoomed in on the chart. We're going back to July of 2011, but the important element I want to share with you is this, and that is we have got an important chart formation here, in my opinion, and that is we've had several tops, of course, right here, here, and here, but these two are the important ones that I want to concentrate on. If you measure from down here to the lows and up here, this whole thing is distribution. This is really a distribution in gold, meaning there's plenty of gold to go around. The concern's not there. But this is the important part. When the market went below this point right here, and you can see how it accelerated on the downside once it broke through this line from here to here, it just really accelerated to the downside. Now, if you measure from the lows, which we have as right here, this is the low, 1527, okay? And we go to the highs, which are right here, we'll call this the high, and that is 1795, okay? That's $1,795 an ounce. And you subtract 1527 from this number here, so we'll just put 1527. And we'll subtract that. So we'll just do a little subtraction, very simple, and that gives you 268, okay? We take the 268 and we then go to here and we subtract 268 from this number here, and that takes us all the way down to 1259, okay? $1,259. We're currently trading at $1,370. So it's $110 lower than we are right now. And I want to show you the formation I think is happening in gold that's going to push it. So this is the number one formation. This is really just a big, we call this a pivot point. I've talked about these before. This is the pivot point right here. There's the measurements there. And you reverse that over, and that gives you the 1259 target zone on the downside. So let me just clear everything off the screen and take a look at the chart closer, okay? And we're going to zoom in again. Okay, we're now looking at a 6-month chart. You can see right here a 6-month chart of gold, the same chart. It's just zoomed in more. And this is the formation I want to share with you. And you can see how the market's sort of been stepping down like this. But this is the formation I want to share with you. This type of deal is called a triangle. Not the triangles we use on MarketClub, but just a technical triangle. And normally what you can do to measure on a technical triangle is take the length of this here, the top, and it breaks out usually in the direction of the major trend. Now we know the major trend in gold is still down. So if we break down this way, we can measure pretty accurately where we think it's going to go. Now we already have a 50% Fibonacci retracement to 1306. We also have a 61.8% fib retracement to 1160. And then we have our target zone from our other formation, the pivot point, at 1259, which is somewhat in the middle of here. But the question is, how far is this going to take us? So if we measure from, let's say, the 1550 area, which is the top right here, we'll just mention this is 1550, to the bottom, and I'm going to call that 1350, let's say, and maybe a little bit more. That's $200. So you subtract $200 from the breakout point, and let's say it's around 1370. Subtract 200, and that takes you down to 1170, which is very, very close to this Fibonacci number. So again, remember, the trend is down in gold. It's likely to continue, and when there's no news comes out, that's a negative sign for gold, because that's just an erosion of confidence. There is another way to trade gold, and that's using our trade triangle technology. Since the beginning of 2013, we realized gains of $294.17 and losses of $82.10. It's almost 3 for 1, which is a nice return to have. So a net profit, or net gain, I should say, before commissions of $212. That's like $21,000 on one contract of futures. So that's how the trade triangles are. The results you can go through yourself. Also on the right hand side you see all the rules for trading, how we got these numbers. So it's easy to check. You can see that we're telling you the exact science of how to do this using our trade triangles. So good luck with those. Thanks for stopping by and letting me go through the mechanics of judging how far a trend and a trade is going to go. So let's see if gold gets down to those levels we talk about, the Fibonacci numbers 1306, 1160, the target zone of the pivot point at 1259, and also the other triangle formation down to 1170. I'm Adam Hewison for Market Club. Have a great day trading. Thanks for watching this video. I hope you found it helpful.